Today we welcome Nakul Mandan, the founder and partner at Audacious Ventures. What's interesting about Nakul's journey is that he discovered the power of the playbook and he is now utilizing it to give him a unique differentiator to create outlier opportunities.
Whatever idea you're pitching me, I'm really thinking, is this really an urgent problem to solve for the buyer? People don't solve important but not urgent problems. People solve important and urgent problems.
In this episode, we talk about founder-led sales.
The things I look for is the founder beginning to have clarity on ideal customer profile. If you don't have an ICP, you're probably not ready for sellers.
We talk about hiring your first VP of sales.
Ultimately, it does come down to what is the impact this person can have on my business.
We also give some really tangible advice for salespeople and sales execs that are looking to enter the world of VC. This is his playbook. This episode is sponsored by PGAI and Seller. Go and discover how these solutions can help amplify your sales execution. Check out the descriptions below. Welcome to Hunters and Unicorns. I'm Simon Kutis and I'm joined by my co-host Ollie Kune.
Welcome back to the show, everyone.
And it's with great pleasure that we introduce Nakul Mandan. Nakul, welcome to the show.
Thank you for having me.
It's an absolute pleasure. Really do appreciate you coming and seeing us today.
I've been looking forward to it.
You don't have to lie.
It's been long overdue. We've known each other for a while, and so it's been long overdue.
It is long overdue. Yeah. Absolutely.
By way of an introduction, you are the founding partner at Audacious Ventures.
Yeah.
And obviously, you've had an illustrious career in venture for over 18 years now. It's been a very, very fruitful and long career, and you've obviously founded your own VC firm. Want us really just start by understanding, because you have a very strong differentiator in terms of your approach. But before we go into that, help us understand a little bit about Audacious and the types of investments you make. Let's probably start there.
So Audacious is a seed stage firm. We manage about $250 million. We lead or co-lead seed rounds. So if somebody's raising $1 to $10 million, we can lead or co-lead the entire round. Prior to Audacious, I was at Lightspeed for about 6 years, and prior to that at Battery. I grew up in India, studied there. So first 3 years of my venture career were in India, and then last 15 years in the Bay Area. And then I got my green card 10 years into the US journey and decided to do my own thing and started Audacious. And it's been a fun ride. So manage about $250 million, have about 35 portfolio companies now, and it's been a fun ride.
So obviously you are going in early, you're at seed round. So it's a different type of investment, but you've been through quite a journey in your own kind of journey in terms of how you view investments and actually how you then work with your investments. It's quite a unique approach. So kind of tell us a little bit about that.
Yeah. So at Audacious, our foundational belief is that the single biggest ingredient to startup success is the density of exceptional people in a company. It all starts with the founder. Ultimately, the founder brings the rest of the team around. I used to be a product market first investor. Somewhere maybe 3 years into that journey, I started feeling, that I'm going to have a much better career if I focus more on founder quality than on trying to identify or come up with themes myself. So I shifted somewhere around 2017 to first being a founder first investor.
So that was the point where our worlds came aligned, right? I think we obviously at different stages, of our businesses, but it was the realization that there is sales execution out there, which is, I suppose, done very differently and in a very elite way. Talk to us about that and how, that, I suppose, inspiration came and helped inspire the direction of your organization.
So it came through, a lived experience in my portfolio. So, one of the areas points where our journeys collided was this company Multiverse in London, which you guys are very familiar with. It's now a pretty scaled up company in the hundreds of millions of ARR at this point. I had seed funded the company while I was at Lightspeed. The company was doing well, had product market fit, was growing well, had gone from 1 to 4 million, 4 to 11 million. So, it was already growing well. And I kept feeling like this company could grow even faster. It's an N of one company, has perfect product market fit. And then, I had introduced them to a guy called Jeremy Duggan, who's a legend in the sales world. And for your audience especially, he's probably a very, very known quantity. I would even say he singularly changed my life in terms of how much of an influence he had on what we are now building at Audacious. But he joined the company as the president and CRO at around 10, 11 million of ARR. And in the subsequent years, I saw the company go from like 11 to 38 and 38 to 100 million of ARR. And just seeing those next 2 years and quarter after quarter, the execution quality and the recruiting quality, I just transformed as an investor. And I felt, before that, I thought I'd become pretty good at go-to-market advice, and I was the VC who would come in and advise on how to build a go-to-market engine. And I still think I'm pretty good at that. But sitting in those board meetings, I realized, what's better than my advice is if I can find 10 Jeremys, 20 Jeremys in my career. And I say that in my career because there are very, very few Jeremy Duggans. Mm-hmm. And so that kind of became the genesis of what Audacious is today, where ultimately I felt I have just two jobs: find forces of nature as founders to invest behind, and then help them build an amazing team. If the team is amazing, the problem solving is happening. They don't need to wait for a VC to tell them anything, mm-hmm. right? And I'm exaggerating to make a point here. Yep. Of course, like on the fringes, some advice can be useful from outsiders, but ultimately the people in the building are building the company. And so that's where I kind of doubled down and tripled down over the last 5 years. And now we really feel we've built the best startup recruiting engine in town for early stage companies.
So tell us a little bit more. So you've actually got in-house teams now that go and work with the investments that you make, and is that part of the differentiation that you then offer as part of a very competitive market to get the best deals, right?
Very much so. So founders look for different things. There's no one mold of each founder is looking for the same thing, right? So when founders are talking to us, I'm sure they are evaluating us on multiple dimensions. But our pitch to founders is that we can help you move the needle. We can help move the needle on two dimensions. One is 0 to 1 team build out. We can help you go from 2 amazing founders to 15 to 20 really amazing people in 1.5 to 2 years in a very aggressive, tangible, execution-oriented way. And I'll talk about that in a minute. And the second is we can help you build an amazing go-to-market engine once you've gotten to some semblance of product market fit. No VC can help you get to product market fit. But if you can get to product market fit, beyond that, there are some frameworks that you can apply to build a scalable sales engine. Those are our two superpowers. That's what we pitch. Beyond that, look, founders do back channel references, chemistry matters, personal chemistry. Somebody resonates with my journey, somebody might not resonate with me in my journey. And so all those factors also play in. But to the extent they're looking at how will this VC increase the odds of success, at least our pitch is we can help you build an amazing team, and we can help you go from founder-led sales to an amazing initial scalable, repeatable sales engine in a way that very few others can help you. And so then on recruiting specifically, half of our team is recruiting, led by our talent partner, Samantha Price, who I believe you guys know very well now. She has 2 engineering recruiters, 1 sales recruiter. Where we are fundamentally different than any other talent team in venture, and maybe there are 2 or 3 that are comparable, is every other talent team on Sandhill Road focus on 2 things. One is they focus on exec recruiting. The challenge is that at early stages, you don't need execs. You need 10x IC people, so 10x individual contributors. So we focus on getting on 2 roles, 10x engineers and 10x sales reps. So one is that. We focus on IC level recruiting. Second is those talent teams focus on giving advice. At again early stage, you need doers. So we are doers on the talent side. We run searches in-house. So if somebody in our portfolio comes to us and says, I'm hiring my first 2 sales reps or my first ML engineer, Bay Area based, X years of experience, we don't just, introduce them to 3 recruiters. That's what normal talent teams do. We take that spec, our recruiters are then reaching out to 150 people over the next several weeks, converting that to 30 plus pre-screens, converting that to the 7 to 17 candidates that we've specifically matched to that spec and who we believe and we've pre-screened for to be A++. And there's a lot that goes into it. We have mapped out what are the amazing sales cultures in the Bay Area and New York or other geographies. Why are those sales cultures amazing? All of that intel comes into play when we are recommending a candidate. It's not just a LinkedIn profile that we send. We send a full write-up and send exactly why we think this person is amazing. And a lot of that comes back to some of the discussions you guys have had on the podcast with, people like Carlos and Jeremy and Dan Figuer and other people.
So in terms of when you're working with the founders and you've just made an investment, your seed, so a lot of them are going to be pre-revenue at that point, right? Yeah. Do you just have a sense that they're going to find product market fit? How do you start to assess this is something that I really think it has legs? How do you assess that?
Yeah, look, I think there are a few. It's not a science, and if it was a science, we'd all be very successful in every single investment we'd make, right? So, I look for 3 things broadly. First and foremost is founder quality. I think good is the enemy of great. There are very, very few founders who can will a company of magnitude to existence. We call them forces of nature, where come what may, they will win. We try to find them 10 times a year. We're not right every time. But that's kind of the lens with which we approach our investment decision making. Are we in business with forces of nature who will make things happen that are improbable? We have this phrase internally that kind of is almost a second name to Audacious, improbable outcomes. Is this person capable of improbable outcomes? That's what we're looking for. And I've blogged about what I look for on that front. So one is a force of nature founder who's capable of improbable outcomes at the center of it. Second is the market very, very large directionally? Why I use the word directionally is at seed, so much is going to evolve on your idea. So you pitch us an idea. At that point, you're talking about it as a, SMB idea. 6 months in, you might decide that the mid-market or enterprise is a better segment. You might decide that, hey, the exact product idea that I had, there's something just adjacent to it that has more market pull. So we kind of course, we need to like the idea in the day on the day that we are investing. But we do spend more time getting comfortable on the market quality and the market dynamics and the size of the directional market that they're going after versus the very specifics of the idea, because 2 people in the deck, a lot is going to change in the first 12 months. And the third thing that I have started looking at a lot over the last several years is the urgency of the buyer. Whatever idea you're pitching me, I'm really thinking like, is this really an urgent problem to solve for the buyer? If it's urgent and the market size by dint of the dollars attached to that problem is large, then I think magic can happen. If the problem is just not urgent, it can be important. People don't solve important but not urgent problems. People solve important and urgent problems. In terms of our own recruiting effort, when we're investing, it's 2 founders for the first 6 to 9 months. There's mostly hiring engineers, not salespeople yet, right? And the first 250 to 500K of ARR is really the founder's responsibility to get to, because pre-product market fit, you're not going to hire like 2 SDRs without an ICP and other things and get to the holy land of product market fit. So the founder has to navigate that part. So the first effort on our side is on helping on building out the engineering team, not on the go-to-market team.
This episode is sponsored by Seller. Seller provides a white glove treatment to every complex deal with their bespoke system, whilst ensuring you get the most value from your CRM for everyday selling.
Yeah, I was just about to ask, we've had a lot of experience like yourself. You've definitely had a lot more than us. But, when it comes to, working with some of these founders that are very product-led individuals and their transition into sales, right? Help us understand a little bit around your education and how you support those founders really start to appreciate what sales is, but then what good sales excellence is.
You're talking about when they're selling themselves, right?
Yeah, exactly. Yeah. They know how to build product. Do they know how to sell, right?
So look, we do look for some of those qualities, in like on the day that we are investing. Can this person also be commercial? Can this person get in front of buyers repeatedly and sell a larger than life story? So storytelling is a component of our investment decision when we are looking at founders. I think where a common, like, there are many places where mistakes happen, but one of the common ones that I think happens is that people underestimate the value of pipeline and repeatable pipeline. People who are not in sales or coming from outside, like product or engineering, they might think that, hey, I'm talking to these 8 people as potential design partners. They're all giving me good signals. 6 of them will convert. It really is often that if you're talking to 8 people, 2 will convert. Lots of things can come in the way. And so the first thing that I at least encourage the founder to think deeply about is pipeline generation and repeatable pipeline generation. Maximizing the extended network you have to get in front of as many buyers as possible, getting enough signals, getting the nose to know where my product is simply not resonating is good. It's good information to have because that informs the ideal customer profile. That ideal customer profile then informs that what I'm building, is that actually applicable to a large swath of the market or a small segment of the market? Right there is market size as an as a follow-up exercise, right? And so I think what we do is, depending on, we let the founder decide, but we do bi-weekly or monthly calls and things, and they are on Slack. And at some level, it's a constant discussion, but we do have these bi-weekly to monthly check-ins to kind of check in on, are you in front of enough buyers? What's resonating, what's not resonating? Now, in terms of the tactical help on how to be a better seller, which is probably the heart of your question, almost in every investment we make, we surround the founders with a few salespeople. And we kind of, what we've learned is, like, if you, at the seed stage, if you get an angel who's like a CRO level, one of the legends that we all talk about, they are too strategic at that point. So you need actually somebody who's a second to third line leader, maybe a new VP of sales, to come in as an angel, maybe as an advisor, if not as an angel. It can be a small 10K check. But if they invest a 10K check, they feel invested in the company. They'll feel like, I'll take up the call at 10 p.m. on a Friday night, or on a Saturday, I'll do a Zoom with them, right? And so you kind of want to surround your founders with 2-3 salespeople who can give very tactical advice. Look at the email campaign. Look at, like, is this outreach actually good? How do you handle the first sales call? What is your sales messaging? Because, again, like, VCs can give this advice, but that advice will be useless. You want practitioners to give that level of tactical advice. So there's tactical advice, there's strategic advice, and then there's more macro, like market scalability, market expansion, product. And you kind of decide as to who's good for what and where your swim lane is. I've decided my swim lane is on go-to-market and on recruiting. And so I stick to my swim lanes, and wherever I feel like the founder might need other kinds of even sounding boards, I'll try to surround them with those kinds of people. That's the approach I've taken, at least.
In terms of the emphasis of the founders in that early stage, are they trying to cut checks, or are they really trying to learn? They're trying to reinforce their hypothesis. What is the real kind of emphasis in that moment? Are we just looking at how much money they're able to make, or what is the focus?
Look, at the very, very early stage, it's the phrase people use is design partners, which is, and so to validate the hypothesis is the design partner phase, which is, I'm building this. I got 5 people excited to help me build this, 5 buyers, and I'll give them a very, very early version of the MVP. I'll build based on their feature feedback and stuff, and that is somewhat validating the hypothesis while talking to the buyer. So that's one phase. But right after that phase, if you feel like, okay, this is now resonating with these design partners, it functionally works, it actually delivers value, then you are in that phase where you start feeling, okay, can I actually scale this? Ultimately, Paul Graham has a great post called Startups Equals Growth. Growth is everything, And the sooner you get on that journey, the better. So you validate the hypothesis, and then you kind of move towards, can I scale this to 20, 100, and then beyond? And now there's some element of validation that's happening throughout the journey, right? There are companies that plateau at 20 million of ARR. Why do they plateau? Because they probably stopped validating something about their competitive landscape, market size. Are they continuing to innovate on the product based on new feedback or the market shift? So some element of validation is always going to happen. And exploration is always going to happen. But there is a phase in that first 6 to 12 months where you're purely validating, is what I'm building even useful to the world? And sometimes you invest in that phase, sometimes you invest right after that phase.
And so at what point do you then think is the right time for them to start bringing external sellers in to support and kind of ignite that?
Yeah. I would say there's no magical number to it, but it tends to be somewhere in the 250 to 750K ARR range. Probably midway is actually the most common number. But really what happens by then is you've got about 10, 12 customers, maybe 10 to 20, depending on deal size, obviously. But there's some sense of that if I can get in front of more customers, this thing is now selling. Like there's some feedback you've gotten from the market that my message is resonating, my product is resonating. I need more leverage on time. It's not about product feedback anymore, right? And so there is a qualitative element to the answer to your question, which is the founder's making a qualitative judgment that I am now willing to bring on other people to get leverage on time. And why it's qualitative judgment is this. If the product market fit is not there and selling is still requiring me thinking on my feet too much and actually navigating each sales conversation differently, you start bringing in sellers, there's no repeatability, they're going to fail. A founder has so much more context on the company, they are able to do a lot more things. You want to bring in sellers when there's repeatability in at least the messaging to a segment of the buyer landscape. Without that, it's difficult. So I would say the things I look for is the founder beginning to have clarity on ideal customer profile. If you don't have an ICP, you're probably not ready for sellers, because you don't even know who the seller should be focused on. Because the ICP is telling you that I have clarity that this is my ideal buyer persona and this is why they buy, right? In the absence of that question, I wouldn't. Even if you're at 750K, if you can't answer that question well, I wouldn't bring in sellers yet. But once you have that, I would say then the immediate next question on whether you're ready for sellers is, do you have some semblance of a repeatable pipeline generation happening so that when you bring on sellers, they will have the pipeline to succeed? Now, again, that question becomes nuanced. If you're selling to enterprises, AEs are used to generating their own pipeline. If you're selling to SMBs, AEs need SDRs. So in that case, then you would say, I want to hire 2 SDRs before I hire AEs. Or is there a marketing-driven motion that is driving all the pipeline? So you want to hire AEs, but you also want to make them successful. And a good way to not make them successful is to hire AEs without having thought through what is the pipeline they will attack and how they will get that pipeline month after month after month. By themselves, some other mechanism, whatever it is, you need to have thought through it.
Thanks to our sponsor, Pipeline Generation AI, the platform that researches your top accounts, creates insights and assets to help you engage more effectively. Elevate your conversations and transform your pipeline with Pipeline Generation AI today.
As a firm, you're obviously very thoughtful about these elements, but not all of the VCs are as hands-on and forthcoming with advice, right? So obviously, if you're a seller and you're thinking about perhaps throwing your hat into the ring to maybe be part of an audacious venture investment, help us understand a little bit about how some of the benefits and some of the reasons why you would be a good place for great AEs and great salespeople to maybe consider partnering with you guys?
First of all, I would say we do feel like our focus on founder quality is very high when we are making an investment. So our hope is that the average quality of founder in the Audacious portfolio is 1 to 2 notches above the average founder in other portfolios. And I think some of that will be visible as people interact. I would say I'll answer your question in 2 ways. One is when an AE or a sales leader is interacting with an Audacious portfolio company, I think the evaluation should be based on 3 things for them. Is this an amazing founder? Can I see this founder build a multi-billion-dollar company over time? Does this person have the scalability to do all of that, do all that it takes, get capital behind the company, get the right talent behind the company, scale as a manager, innovate on product and market constantly, and be relentless. So first is founder quality, second is market size, and third is by then, especially by the time that sales leaders are evaluating Audacious's portfolio companies, there's enough evidence on the buyer side, and is there an urgency on the buyer side towards the product that we are selling. I think if those 3 things come together, you should start feeling excited. After that, there is still a question of some people are better suited for late stages versus early stage, and that is a personal decision. And when I'm trying to, sell our portfolio companies to potential recruits, that part of the decision, I just give them the dichotomy of the career paths that you could have. But ultimately, that is a personal decision. So that's one. Like, that's how they should evaluate it. And if those 3 things come together, I think they should feel excited and dig in. The second reason is an Audacious specific reason, which is assuming you agree with us that a high density of exceptional people is a very, very key ingredient to startup success. We are a firm built on that thesis, and we are relentless on increasing the density of exceptional people in the companies you're joining. So if you're a sales leader and you have the assurance that Audacious will be behind this company and relentlessly getting you 10x salespeople, and the engineering team is going to be full of 10x engineers, you've increased the odds of success for yourself also. Yeah. So anyone should feel excited about joining a team where fundamentally there's a very, very high impetus on building an amazing team, and that will continue even after they join.
I want to talk a little, because this is a really important point that you've just made, and I just want to focus a little bit on founders going through a bit of a mental process as well, because it gets to the point where they've been founder-led sales, and then they start to see how much it costs to hire salespeople. Absolutely. And they find that quite difficult to accept that the sales teams are going to possibly be making more money than them, more money than their engineering, and they kind of battle with that. What's your role in that to really help coach founders and embrace sales?
Yeah, a few things I would say here. One is that, again, when we are investing, a key part of it is, are you looking to build a multi-billion-dollar company, right? And the people who are looking to build a multi-billion-dollar company, they know they need to get the best talent, and they know the best talent also costs, right? Whether it's in cash or equity, and that can be a different lever in itself for each person. So there's some, like, we are pre-vetting for the founders who are leaned in towards building an amazing team and leaned in to do what it takes to grow aggressively. So I don't feel that is as much of a question. There's still a sticker shock to the point that you're making, that they might have theoretically agreed that, hey, of course I'm going to build an amazing sales team. Of course that's how OpEx is, and that's how burn comes. But there's probably still a sticker shock that they see. But that's when you show them the data, and we live in data there, not just our own data, but like there are now platforms like Pave that show the data on what a Bay Area sales rep costs versus somewhere else, or a top tier sales leader. Our guidance is always that you have to start every search with the mindset that I'm going to get a 10x person. I'm going to get the 99th percentile person. If you do get the 99th percentile person and you're paying the 90th percentile comp, you are getting a deal. That's what at least we guide people to. So we actually do guide our founders to say, hey, let's start the search with the intent of getting an amazing person. And if we get that amazing person, at least our encouragement, it's your decision ultimately, is to be willing to pay up for what you're getting. Most searches fail not because you didn't pay up or it doesn't fail on that point. Most searches fail because people didn't start with the idea of, I'm going to be relentless on getting the 99th percentile person. They try to run a good search. This good is the enemy of great has to be deeply ingrained when it comes to talent. And I think I made this mistake early on in my VC career that good and great are on the same spectrum. They are not on the same spectrum. The exceptional people are just from a different planet. Their training is different, their lived experiences are different, and they show up with a different mindset. I would argue the difference between good and great is the same as the difference between good and absolutely horrible. It's night and day. It's not that that a good person can become great person. If somebody hasn't been exceptional after 10 years of their work experience, they're not going to become exceptional in the 11th year. Okay, so then when you're looking for the people, you need to get relentless on that. Whoever is running the search, whether it's Audacious or some search firm, you need to be willing to tell us and them, hey, this is not the bar I'm looking for. I'm looking for somebody higher. You have to be relentless in pruning the pipeline, knowing how to interview them. How do you assess the bullshit artists versus the real deals? Do you do enough back channels? Do you understand which cultures they got trained in? I think cultures in which people get trained in and who they were mentored by is a very important ingredient to exceptionalism. And so you want to find that. You find that and you feel excited, you will be willing to pay up. I think founders who are aggressive, they play to win. And they're willing to pay up if they find excitement. So the mistake is not on the comp side. The mistake often happens when you know why you're not willing to pay up is because you're not excited enough. You don't think this person can change the game for you.
That process of educating founders, and we've experienced this more often than not, and we sit here and laugh.
We've given up a lot of times as well.
There has been a point, and we try to, and a lot of the reasons why we created the Founders Edition, for example, was to really kind of help educate, not through our words, but trying to use social proof to demonstrate why and the difference between 10x reps and 10x salespeople in comparison to everything else that falls outside of that. And it's one of the biggest challenges, because I think there is a mindset of I've built a great product, my product sells itself. As long as this person can have articulate our value proposition, we're going to sell it.
Yeah.
Do you find that, or is that an indicator of an investment you wouldn't make because the coachability of that particular founder?
First of all, I say all these things. Obviously, we make a lot of mistakes, both on all kinds of assessment. That's the nature of VC, and that's the nature of recruiting also. So we did a session for the 3 partners at Audacious. MZ, Sam, and I did a session on recruiting to train us on recruiting by Carlos Delator on how to recruit salespeople.
The best in the industry.
One of the absolute best. Yeah. He did a 1.5 hour session with us. It was fucking phenomenal, and the level of detail he went into and stuff. And you ask him, or like I remember I asked Jeremy Duggan, that Jeremy, you have this unbelievable philosophy on how to recruit. Do you still make mistakes? He's like, yeah, I still make mistakes, right? And this was like, I think this exact conversation I had with him was in 2019, and he'd already become a legend by then. And I asked him actually, in this specific, I'll share that example as to, he one of the things, he has this criteria called ICE, intelligence, coachability, character, experience. And he's relentless about that. And I asked him, when you do make mistakes, what is the potential mistake you make? He's like, sometimes I believe in the coachability so much more that I feel like something is missing, but I can fix it. And every time I do that, I'm believing in my coachability and that person's scalability more than what they've already demonstrated. So even legends, absolute legends like these people make mistakes. Same on the investing side we do. So to answer, now going back to your question, on that you're looking. Yeah, I think I would say if we are unable to convince the founder that there's absolutely 10x salespeople out there or 10x engineers, yeah, we probably made a mistake.
Yeah.
This is something that's extremely important, that and this is where I do think the Bay Area and New York do have an unfair advantage on other geographies, which is founders coming from these places or in these places are often in companies or in startup cultures that have lived that. So they grew up watching the difference between 10x people and not those people. And so if you see that difference through your 20s and, early 30s, and you're coming and starting a company, you feel like, no, this is how if you're learning that during the journey, there is a potential problem that you won't learn fast enough and time will run out. So we try to look for people who understand that difference on day zero.
Awesome.
If we are convincing people on exceptional people exist, then I think we made a mistake.
It's amazing. I just needed that so that we can use this as a tool to be able to share with those founders that aren't, because for us, our hypothesis is we share exactly the same hypothesis there. So I think when it comes to talent attraction, again, you obviously you give a rep or a seller or a leader an unfair advantage because you've done a lot of this evaluation yourself, right? There are lots of organizations that don't have what you've set up internally, right? So how can, a rep that is joining an early stage, organization use data, metrics to evaluate whether it is the right opportunity for them if they aren't unfortunately coming through your portfolio?
Again, I'd go back to the three things I'd mentioned earlier, which is this an amazingly large market?
Yeah.
Like if there's no large market, there's no opportunity to build a massive company. And going at the earliest stages is pointless if there's not a big company to build, right? So you need extremely large markets so that even after mistakes happen, there's a big market where you can even earn your way into big company status. But to build a big company, there's a lot of execution needed, despite the market environment or market availability. And so the founder is very, very important. And third is a lot of market sizes. Why I keep coming back to urgency of buyer is a lot of market sizes are big theoretically, where theoretically you multiply the number of organizations that might need this thing into the price point, it comes out to be a big market, and you never see a big company in that space. There's a lot of examples of this. The reason is the buyer is just not urgent. The buyer is just not waking up trying to solve that problem. So it's a theoretically large market, but the company doesn't end up being a fast growing company. You can't grow fast, you can't get capital, it becomes a self-fulfilling prophecy of not getting to the holy land of a exceptional company. And so I would look for those three things, regardless of whether it's in the Audacious portfolio or not.
Yeah, because one of the criteria whenever we're speaking to reps ready to join an organization, yes, it comes people. Yes, there's some of the other soft stuff around financials, etc. One of the big questions is, has it got product market fit?
Yeah.
So looking at an earlier stage startup, what metrics can you look at there to know that that company is at least on the path to product market fit?
So I think the reason I've been saying urgency over metrics, by the way, of course, if you can get metrics, you should.
Yeah.
First of all, metrics at the early stages can be a misleading indicator of success. Why? Let's say I'm a founder who's very seasoned. I sold the first 10 customers through my network. Okay, so are those 10 customers or
friends,
semi-customers? Yeah. So and that could get me to 500K ARR very quickly. And if that happens, cool, that can be a misleading indicator of success. So I think till something is repeatable and scalable, let's say call it beyond $5-6 million of ARR, it's difficult to say definitively with the metrics that this thing is just flying. And by the way, beyond that also the market size is still important. But the first 1 million definitely can be a misleading indicator. And so that's where I think directly working on the buyer side and understanding, is this problem something that is important and urgent? And will I be able to sell the software?
Yeah.
That it comes down to, do I feel greedy as a sales rep that I will beat my quota.
Yeah.
Right. The good news on both sides, or at least on the founder side, when evaluating salespeople compared to engineers, is that salespeople come with a scorecard. What have you attained in the last 3 years? We focus a lot on that as an example.
Yep.
Again, a person who's been doing 70% quota attainment for the last 3 years is not magically going to convert into a 120% person just because your product market fit is amazing, right? And so likewise, like, is the sales rep feeling the greed that if I come here, I can crush it?
Yeah.
That's what if you feel that, you should probably dig in.
Yeah.
I want to take this opportunity to ask you all very kindly to go and hit the subscribe button. Whether you're on YouTube, iTunes, or Spotify, it will mean the world to us if you could hit that subscribe button.
What about something, again, being shared with us in the past, that using your own network, because there's going to be a bias with the people and that have introduced you into the organization that you're having a conversation internally, using external validation and being able to speak with your customers to validate some of these, the market opportunity there. Is that something that you would suggest and that you give freely to people that you're trying to convince to come and work for these organizations to help with that validation?
So look, I think the reason the network driven recruiting on both sides can work is you have unfair intelligence on whether the other person, for a sales rep or engineer, about the founder, and for the founder about the engineer or salesperson, is this person actually exceptional? Why? Because interviews are a misleading indicator of future success of candidates. So we definitely say that the best way to validate whether this person is exceptional when you're interviewing them is to do a lot of back channel references, and do a lot, because the first 3-4 you'll do are just friends of the person and they'll just say good things. And you have to go in with very pointed questions and ask all kinds of questions, because you don't know which question might lead to the truth. So likewise on the other side, if I'm an engineer, I'm a sales rep, and I'm evaluating joining a company, and yes, I can see somebody selling me, but is this founder actually exceptional? Do they have the grit? Do they have the urgency factor? Do they have the larger than life selling? That might be visible in the interview a little bit. Let's say I'm a sales rep, can they actually hire amazing engineers too? So how do you know all of that? So if it's an in-network relationship, there is some unfair advantage on knowing how this person works, right? And so I do think the best founders we work with, like, we show up and the first 3 engineers they've already identified through the network, because they are high quality, they know high quality people, and those high quality people are willing to bet on this person, and it becomes a little bit of self-fulfilling thing. It's often like our recruiting they use for the 4th engineer, 5th engineer, because they're like, now I've hired the 3 best people I know, and for the 4th one I also want to tap outside my network so that I'm not hiring just local maximas. So on the candidate side, there's some unfair advantage of the in-network thing. The disadvantage might be local maxima, which is you're going for the best founders you might know, when actually your job is to find the best founders in the market for you, for your talent period. Right? So there's a pro and con there.
Yeah.
I've got a question that I'd really like you to share some insight on, because we get asked this so much, and this is around equity for going in as a founding AE or a founding, VP of sales or whatever it is. How should a person entering a startup evaluate what is a good package and what equity? Tell us a little bit about that.
Yeah. Look, I think some of this gets anchored around the data again, right? So the data is freely available for all of us to see. I would say for a typical first head of sales, the equity is somewhere between 0.75% to 1.5%, I would say. It's more about the leveling of the person. So if it's really a director of sales getting a first-time VP of sales position, maybe the equity is lower. If it's a second-time VP of sales, they're joining you, you might end up being more senior or higher on the equity. I've definitely had a few situations where I've encouraged, for this person, you need to go outside of whatever. Like when we recruited Jeremy to Multiverse, I won't share the exact number, But what I can say is that if there's a book on recruiting and every chapter has the range of the equity we would have given that person, that equity would not be in the book. Like, it was outside, you know. And I'm sure there are people, that's not just one example. Some of the names we've already mentioned, like, probably get those kinds of equity. Ultimately, it does come down to, like, what is the impact this person can have on my business. But I would say 0.75 to 1.5% as a first-time VP of sales is probably in the range. Would I advocate for more? It depends on the person, and it depends on what is the game-changing nature of this person. Now, every time you go for somebody senior where you're willing to pay much more, you also need to make sure that they are willing to come down to the early stage nature of this journey now.
Do the job, do the work,
Yes. So there's always a risk of going too senior. And I would say there's more risk than more often the risk plays out that they come in, they want to hire like 5 different sales ops and other things, and the company might not be ready or might not even be able to support the burn. And if that is the case, then it might be a bad hire despite the person being pretty good. So I know I'm giving a longer answer only because it's not a perfect science here.
Are there resources available? You know, are there data points? Are there fact sheets on this? Or are there kind of some fundamental things that you should be evaluating to say, yeah, I'm getting a good deal? Maybe dilution or the value of the business. What other factors need to be kind of met?
So I'd say, so first of all, data is available, and there are at least 2 data sources. I'm blanking on the other one. First is Pave, and then there's, I think, one more company that provides this data, and it's available to candidates as well as employers. But there are factors like, again, I think the best decisions are made I would say, through greed of working with each other. So not greed for money, more than I'm excited to work with you, and my ideal was X, but I'm willing to go beyond X from my side as well as your side, right? If there's not enough excitement, then you should probably hold out for the next offer that you can get. So there's data available. Second is there is elements of valuation, and the reason valuation becomes important, then you can multiply your equity into that number and say, okay, this is what I'm getting today. This is what this number could be in 5 years. By then I'd have vested my 4 years of equity and maybe gotten a re-up. And this is what it'll be. And is that worth my time, right? And so somebody who's a very, very seasoned sales leader might say, hey, this money that I'm going to make is just not worth my time, to be honest. Even if this thing comes true, everything you're saying comes true. And that is the case where you have to go above and beyond on making it worth their while. And that's the case where the founder has to decide that, is this person joining my team such a game-changing move that I'm going to go beyond what the benchmarks are saying to me? I am a big fan of evaluating it that way, where it's less about the specifics of the benchmark. It's more about, can this person deliver the outlier outcome, and just validating that they are ready for that. Because ultimately, we are in the business of outliers.
Yeah.
You can look at the data. The data will give you what the averages say. Yeah. And the average company will emerge. So there is data. You should look at data and anchor yourself, but it does come down to valuation, greed for working with this person on both sides. And then,
I want to just talk a little bit about double trigger.
Yeah.
Because I don't think this is something that whenever I bring this up, and there's a lot of salespeople don't even know what a double trigger is. So just tell us a little bit about that.
It's less relevant at the early stages. It becomes more relevant at the later stages, because double trigger is essentially about when the company gets acquired, will you keep vesting, or what happens to your stake, basically, right? And what happens if you get fired? So double trigger essentially says that, hey, if the company gets acquired and I get fired by the acquiring company, my vesting automatically
pays out.
Accelerates. Single trigger actually is that if the company gets acquired, my vesting accelerates. So if I'm in year 1.5, the company gets acquired, I get 4 years of vesting. Single trigger is very, very rare, simply because, look, single trigger, first of all, the acquiring company has a lot of leverage on this, right? If I'm an acquirer and I'm buying a company and I see that everybody's getting fully accelerated, there's no incentive to stay, I might lose the exec team in the next 3 to 6 months, right? And I'll have to pay above the acquisition value with more dilution to the entire exec team. So then that consideration comes into play in the offer negotiation. And so boards that are familiar with that would say that would then reduce the potential offer for the company, keeping that in mind. Now, maybe all of it is in margin, but in general, I would say single trigger is very, very rare. Double trigger, any late stage exec who's of a certain level should get.
You've started to speak, you started to talk about the right time to hire the right type of people. We spoke about, bringing an SDR in comparison to maybe bringing in your first seller, depending on the time and what you're trying to prove, right? When's the right time in your experience to bring in a leader? What are those leading indicators and what are some of the data points that you know that it's the right time to bring in a leader?
So my guidance on this is I'll use ballpark numbers. You get to 500K of ARR, you're beginning to see scalability and repeatability in the sales messaging. And you're like, okay, I want to go from 500K to 3 to 4 million in the next year. I'm not going to be the only seller. It's not possible for me to sell 3.5 or 2.5 million of ARR next. So I now need leverage. The first leverage you should think about is IC level. Should I hire 2 SDRs or 2 AEs? It depends a little bit on if I'm selling for SMBs, then I need pipeline for sure. And you might consider hiring 2 SDRs before you bring in AEs. If you're going after 150K deals, AEs generate their own pipeline often. In that case, you directly go for 2 AEs. I mentioned 2 as the number. You should never go for 1 AE. Why? Because you hire 1 AE, they flop. Was it because you made the wrong hire or because you don't have product market fit? There's not enough signal. 2 AEs, because hiring mistakes can happen, right? Even for the best of us. And so when you hire 2 people, they compete with each other. There's just more signal. If one works out and one doesn't, at least you know that there's product market fit and somebody can sell this beyond me. And the second one was a bad hire. Now, if both fail, then either you have a really bad hiring criteria or you actually lack the product market fit to go beyond founder selling, right? So I would always do 2 at a time, or at least in the beginning. Now, when do you go for a first head of sales? My sense is around the 3 to 5 sales reps, you want to start feeling, okay, and maybe the answer is 3. And the reason is if a founder has not managed sales reps before, right, it becomes a full-time activity. There is an element of inspection that is needed on a weekly basis on the activity level of the sales reps and SDR team. So let's say you have 3 SDRs and 3 sales reps. That's a pretty involved job. And if those 3 are working, then you want to start bringing on a sales leader to scale this for multiple reasons. Inspection is one. It just is time consuming and it is very, very needed. If you don't do good inspection, you're not going to have a good sales engine because things slip on a weekly basis and then they show up as bad metrics 3 months later and then you've had 3 months of bad activity. Okay, the second is that you're not going to stop at 3 reps. So you have 3 reps today, and things are going well, you probably need to go to 4th, 5th, 6th rep very quickly. And, a great sales leader, one of their primary job is recruiting, training, inspection, and then firing the underperforming reps. So, what you don't want is that you suddenly have 7, 8 reps or more than 5, and then you're bringing on a sales leader who's coming in and saying, well, 3 of these reps are not as good as what I think is the case, or they've not been trained well, right? And so they were probably potentially great reps. They just didn't get the right sales collateral, there's right sales systems in place and stuff. So there's some, again, qualitative element of saying, I have 3 sales reps performing well, this thing is scaling, I'm willing to lean in and build this into a repeatable, scalable sales engine. And part of the repeatability is repeatability of good recruiting, training, and potentially firing of underperforming reps. So I think around that time you go for it.
Yeah. Is there a place for a hybrid sales leader and rep at the same time?
There is probably a place for it. I don't love it, is how I would say. I'll tell you where we've seen it in our portfolio, where there are some founders, the more seasoned founders, invest in sales earlier, by the way, is our experience. The reason is, I think, there are multiple reasons. So more seasoned founders are used to working and getting more out of people. They often have raised larger rounds right from the get-go. So I think they are willing to lean in on sales faster. It's not necessarily always a good thing, but they end up, I'm not making a recommendation here, I'm making an observation that the more senior founders end up recruiting salespeople earlier, and often then they go for a senior sales rep who they promise that, hey, you can be my first head of sales, or they hire for a very young head of salesperson and say, hey, for the first 6 months be an AE, and then we build a team around you. I don't love it. Have I seen it work? Sure, on the edges. I prefer more clean recruiting, but again, it comes down to founders, and I could show you cases where it worked and show you cases. The challenge with the whole game here that we are talking about is it's an outliers game, and what worked for somebody can influence many others, but it worked for them because of multiple reasons, not one singular reason. Or on the sales side, I actually think product market fit can often work for one singular reason. One feature, one thing that they did right can make the product market fit scalable, but recruiting and some of these things can have like multiple angles as to why that formula worked there versus not here. So I don't love hybrid.
Yeah,
is the short answer.
Good. As I said, it's multiple conversations that we've had now. It's kind of like you hire one or the other. You don't want to confuse a lead. You don't want to confuse somebody you don't want to confuse what the mission statement is right here, right now, right? Which is, first of all, generate revenue. Leadership, we can focus on that, but we really now, core focus is here.
Also, like the first time, like the sales rep you hire, if on the hybrid side, if it's that I'm hiring this senior sales rep who will also be the first head of sales, they are very keen to move on to the next phase before delivering on this. And by the way, they might not be, you're taking a leap of faith whether they'll be good as a sales manager. And you have not trained sales managers before or inspected sales managers, so you might not even be aware if they are screwing it up as a manager, but they were exceptional as a. So for multiple reasons, I don't love it.
Okay.
So this is the point where we wrap up on what's been a truly fascinating session today, Nakul. First, I want to say a massive thank you for you joining us and sharing your story and your experience. And I think throughout this whole conversation, you constantly refer to the outliers, right? And obviously within VC, it is all about the outliers. But I think what's really unique about your journey is actually where our two worlds actually do collide, where you've now been able to embrace this and understand what exceptional is and how that's really shaped the direction that you guys are going and how you invest, how you analyze, and actually, most importantly, can the founders really embrace this teaching in the way that's going to give them the outlier outcomes? And I think you guys are really carving out a niche and doing an amazing job, and we encourage anyone in our network to reach out to you or to reach out to us. But you have got lots of blogs, you have got lots of information out there as well. So again, a massive thank you to you for joining us today. We're really excited to see your success and your fund grow, and thank you so much for joining us.
Thank you for having me. And as I mentioned at the start, it's I've heard of you guys for a long time, and Sam, our talent partner, has worked with you on multiple things. So we've been in each other's circles. So it was a long time coming, and I'm excited to see how this shapes out. But thanks for having me.
Yeah, it's been an absolute pleasure. And as Simon mentioned, you've written lots of blogs and articles in this, and we will share those blogs and articles in the description below. So should you want to read and, go into a bit more detail on that. But again, share Simon's appreciation for you coming in and sharing a lot of, your wisdom, but also a lot of your trade secrets as well. And so
it's hard to replicate because you have to understand
100%. And it's taken years, no doubt, like it has for us, to really grasp and understand understand this, because recruiting in this space is not easy. You know, it's not for the faint-hearted. You know, as I said, it's taken us 15 years really to understand what good recruitment looks like. And you've obviously mentioned a lot about the ICE criteria and how you go and evaluate against attributes and stuff like that, which moves away from surface level recruitment, which actually is a big part of what the current industry is made up on. And I know for the first 5 years of recruiting, we were hiring against, you know, Rolodex of contacts and domain experience, hoping that was going to solve the problem and decrease ramp, and that was problem solved. But it's clearly so much more depth than that. So to all our listeners, thank you so much for tuning in today. If you've liked what you've heard, please do subscribe to our various channels on iTunes, YouTube, and Spotify. All the links will be in the description below, and we look forward to welcoming you back for another session very soon. Take care and goodbye.